And Dharmesh Kant, good morning to you as well. Thank you for joining us. In a market like this, where in general markets are getting derated, quality stocks are getting punished, anything which has got to do with consumption is taking a backseat. Why is the Maruti moving independently of the price of the market mood?
Yeah, good morning. See, as far as Maruti is concerned, that's the only listed play you have on the four-wheelers in the Indian market, and a quality play. And as far as, let's not forget that 7th pay commission checks are already there, and it's continuing to be there. The bank balance of the people who are employed by government is, increasing day by day. Good monsoons are there. So those two factors is already in place, and Maruti caters primarily to people who are salaried employees, and the price sensitive segment is where it caters to, and their variants like Brisa and all has been doing very good in the market with a waiting period of 3 to 6 months. So the bookings are there, and they are all bank to bank transaction, hardly any cash involvement is there. So demonetization will have its least impact as far as the Maruti company is concerned, and I think it will continue to do well. In the budget we are expecting few more soaps to come in for the salaried employee, and that will again be an added incentive for them to get onto a better cars, and Maruti caters to that segment. So there will be outliers in this underperforming market, and the Maruti stands to gain the most.
Sandeep, we've discussed Maruti with you several times, and Maruti is like a bull market stock. Doesn't matter what's happening to the world, doesn't matter what's happening to our economy. 3 years on the trot now, Maruti has given positive returns. Will 2017 be another year of positive returns, for Maruti?
I think so, because the story in terms of a greater volume growth was just starting to build up before November happened. And I believe there will be a lot of pent-up demand which will come through both from rural and urban India. And Maruti, if you look at the small car segment, I think Maruti and Hyundai are the two car companies which typically benefit out of it. And only one of them is listed. So my guess is Maruti will do very well. The key of how much returns we'll get will depend on how the volume growth translate into profitability growth, given the fact that this year we also have some price pressures on the raw material side. So I think that's one variable we'll monitor. But overall, I think we'll see decent positive returns and outperformance over the markets.
Okay, Dharmesh, let's talk about a couple of pockets which have had a miserable November and December. Had a fabulous 2016 until then. One of them is cement. Do you think the valuations have come back to levels wherein people can start selectively looking at cement names from an investment perspective? And if so, what are the names that you would recommend?
Yeah, definitely yes. The comfort has come back into the stock pricing as far as cement companies are concerned, because the correction was sharp and big. But I don't think the cement story is done away with. Cement story will continue, and it will gather further momentum both through the infra push which the government is likely to be more aggressive on, and the local demand will also come back, because in the tier 3 and tier 4 kind of cities where housing demand has actually gone up based on the increased salary paychecks and the good monsoon. So just because of a couple of months of demonetization, the retail sales have fallen down, but they are picking up. Our dealer check does suggest that now in as far as retail segment is concerned, things are back to normal around 75 to 80%. Only 20% kind of a gap is there. Corporate sales continue to be as it is. There has not been any sluggishness out there. Among the cement companies, large cap Ultratech is the preferred and the best pick out there. But we do have some mid cap and small cap quality names also which warrants investment by, like a Ramco Cement or a Heidelberg or Dalmia Bharat. So these are the three top pick we are having from the mid cap and small cap segment. But yes, cement is a good value buy at current levels.
Okay. Well, I also want to revisit pharma. And the reason I'm revisiting some of these odd numbers in odd sectors is because last day you really want to take a scorecard of what's gone right and what's gone wrong for 2016, whereas it's been a great year for metals. The pharma index, for the first time after a gap of nearly 7 years, has underperformed the index. So after 2008, there's never been a year where the pharma index has underperformed the index. And as of right now, because what's happened to Sun Pharma, Lupin, Aurobindo, the pharma index has given a negative return of 13%. Sandeep, it's dangerous to take a blanket call on pharma, because pharma is not metal where color is same. Pharma is complex. Every company has a unique positioning. Some are in a good situation, some are in a bad situation. Now this sell-off, Sandeep, some would argue, is giving a great opportunity for a long-term investor to shop. But within pharma, how should one choose? What should one buy? What should be the criteria?
I think you are right to the extent that all companies have different business models, but the common factor in all of them is FDA, and FDA has been the overarching concern for most of the pharma stocks. Now within the space, I would think that the larger established companies which had some issues, those issues seems to be getting resolved, or the issues were milder, like Lupin and Dr. Reddy's. If at all someone has to look at pharma, people should be looking at these companies. I think mid-cap pharma companies should be avoided given their balance sheet concerns and given accounting concerns, and we have seen that when times are good, these things don't come out, but ultimately they do. So I think I'm very off because of many of these companies which don't generate any free cash flows ever. So I think fundamentally looking at the companies, Lupin stands out at this stage where we could see momentum built up, and the second dark horse could be Dr. Reddy's.
Well, yeah, pharma has had a bit of an iffy ride, really, with regards to US FDA re-emergence. So you've had a bittersweet ride for the likes of Sun Pharma, bad for Wockhardt. Interesting moves within pharma space. And, it's really a question mark and a confusion, Nikunj, as to how you treat pharmaceuticals as a pocket in 2017 now.
Well, the pharma space has got divided. First, everything was centered around US generic business. Now, within that, you've got Lupin, which has come out clean. Sun Pharma, they've got their problems. Within the mid-cap pharma space, I think Aurobindo Pharma and Natco Pharma, they stand out. Cipla is in that, launch pad mode where they're trying to go global. Now, when it comes to inward-looking MNC companies, frankly, they've had it right. So, whether it's a Glaxo or a Novartis or an Aventis companies, MNC companies which are dependent on Indian pharma sales, I think they're doing okay. The challenge for pharma is that you don't know how the regime is changing, and I'm not just talking about the US FDA. Now US FDA is more like a manufacturing problem. Good companies will come out clean, bad companies will suffer. Wockhardt is suffering and I think it will continue to suffer. Lupin has come out clean. The regime menace is changing. I'm referring to the way how the price will change, or the generic pricing policy will change under the Trump regime. I don't know. Everyone expects that Trump government is going to be very friendly and nothing will go wrong with big pharma, but then there's a Congress at play which may really change the dynamics there. So to judge what will happen to pharma in 2017, I think will be a very dangerous call, because even though the stocks have come down a lot, Neeraj, valuations are not really all that appealing. I mean, these stocks have not come to P multiples of teens. Sun Pharma is still in early 20s. With growth remain a question mark there. Lupin, again early 20s. So pharma is an underperforming sector, but that underperforming sector has not become cheap. Where I think there is merit, I think, is buying in some of these franchise companies. Whether it's an Asian Paints, or whether it is a Page Industries, or whether it is buying, some of these consumer names which you always wanted to buy. GST will happen, consumption will eventually pick up. These stocks don't correct, and if you're a fund and if you're a HNI investor, maybe these stocks are giving you a great entry point.
Dharmesh, is that a pocket as well that you'd like to bet big on? Just very quickly in a yes or a no, and then we'll cover the pre-open rates and come back to you. Do you think consumer is the space to be in for 2017?
Yeah, consumption will be a space to be in for 2017, but not specifically pharma. It's a consumption play as such.
Okay, 45 seconds to go for the pre-open session, and let's just tell you the trade setup. The trade setup is saying that we'll start off on a slightly positive note. The SGX Nifty is indicating about 15 odd points on the upside, so that's actually not bad news. A continuation of the up move that we had yesterday. Plus, first day of the new series, I don't know anecdotally or otherwise, but if you do a dot map, you will see that it more often than not gives you a slightly positive return as well. Let's see if that happens today. Within that, I think specific stocks, watch out for the private sector banks in particular. They had a fairly decent day in trade yesterday, especially the last half an hour. Let's see if the up move continues today. Eicher Motors could be an interesting one. Some bounce back boys included a Page Industries. Big move yesterday in trade. Let's see if that is a bit of an up move. And Just Dial bounced off its 52-week lows as well, though I doubt that we can have a convincing say on what Just Dial will do. But here are the first trades on the pre-open session. We'll have a start in the green. The first few rates may be a bit aura here and there, but otherwise the start should be about 15 or 20 points in the green. I think the Bharti Airtel stock is showing a very high unnatural downtick, so that will correct. The rupee, well, sub 68 or above 68, which is actually not bad news. There's some bit of gain there. Remember, we've seen rates of 68.24 in trade yesterday. Substantial, about a 30 bips recovery for the rupee. So that's not bad. Watch out for Yes Bank, Axis Bank, the HDFC Twins. They're a fairly decent outing in trade, and let's see if that continues. I think we'll give these rates a chance to settle. I think Maruti has an unnatural uptick, and Bharti Airtel has an unnatural downtick, and both of these will stand corrected. I think auto trades towards the close of day should be very interesting, simply because we'll be hitting the weekend and then the monthly sales numbers come out. By far one of the most important months in this calendar, the month of December, one full month that got impacted or that would have gotten impacted because of demonetization. Very interested to see what the numbers would be like.
And last month around there were some backdated orders, so you didn't really see the real problem emerge. Maybe this month you just may, while last time around it was Maruti and Eicher Motors which actually managed to hold out. You could see some pain coming in for the likes of M&M. Just maybe this month you may not see that cover for the likes of Maruti, because remember, if you try and book any of the new Maruti cars, it's a nice 6-month long waiting period, so that backdata really reflected in the previous month's numbers. Just some other names. So you've got a Petronet LNG as well. They've apparently signed a deal to build an LNG terminal in Bangladesh. That's another stock which is in focus, nicely up 1.5%. BHEL, which has commissioned another 600 megawatt thermal unit in Telangana, 0.5% higher for BHEL as we speak. And then Jagran Pragashan as well. Apparently they're considering a buyback on Jan 5th. Jagran has popped up in trade. A nice smart 5% move is what you're seeing on the stock right now.
Alright, looks like we are in for a decent start, but a decent start is no guarantee of what lies ahead. I mean, these are volatile days, unpredictable days, first day of FNO expiry, first day of FNO series for the Jan series. So obviously there would be a little bit of built up which would be at play. In terms of a market positioning, I think it is very evident that as of now we are nicely positioned both in terms of demand and supply. At higher level there is supply from foreign investors, at lower levels there is demand from domestic investors, and that explains why benchmark indices for the moment it appears that they are in a range. Now will we break this glass ceiling of 8150, 8200? Well, that is a function of events, that is a function of what will happen to earnings, what kind of communication we get on demonetization from the government. As of now we all are speculating that this is the quantum of money which has moved in, this is the quantum of uptick which the government will get, this will be the quantum of dividend which the Reserve Bank of India would give. So I think next 4 or 5 days we will get a lot of hard facts, and those hard facts would be the next trigger.
Yes.
The absolute numbers have to come out. All this kite flying and so-called speculative rubbish what people have, this is the impact, this is the number, this is the total tally, this will happen in the economy. You need hardcore numbers. It's time to talk numbers now, and those numbers I think will have a very large role to play in next 8-10 days, which will tell you the way how macro positioning and the way the balance sheet of government would move.
Yeah, and I just completely agree with that, simply because when a lot of people are talking about earnings, but I think a lot of earnings will be in the expectations that come out. When we get the earnings expectations notes, they'll already have a diluted version. The only thing is, nobody quite knows what the eventual numbers will look like. So all of this will be kite flying at the best sense. It will be conjecture about what a particular company could do in this particular quarter. I think it will be very difficult to say that. However, as we start the first 5 minutes of trade, there is some bit of green on the screen. Dharmesh, I was looking at the notes that you've given, amongst other things, and by the way, then I want to talk about Idea Cellular with our experts as well, chartists as well, because I think that's showing some up move the last few days. But Dharmesh, your notes have an interesting point. You believe auto ancillaries would benefit the most. If I'm not wrong, this is the view for calendar year 2017. Why do you say that, and what within the auto component space do you guys as a house like?
See, auto ancillaries will definitely benefit the most because we think consumption is going to pick up eventually. Once this all settles down, the demonetization, and the biggest trigger for those companies to benefit would be the unorganized sector moving to the organized sector, because unorganized, the biggest advantage was the taxation which they were maybe not paying, and secondly the quality was low. Now what will happen, the tax part will come in. GST, or even if the GST is deferred, but eventually now because of this demolition impact, the facts are known to the government, so the tax base goes up, so pricing goes up, but the quality remains low, and organized players have a better quality at almost the same price, so that entire basket is now bound to shift to them. Unorganized player, to get advantage, to improve their quality, it will take time for the, because time and money both is required. So I think that's a direct and clear play on the sector as such. And among the basket, the themes which one can play it is like Amara Batteries from the battery segment, a standout company in that space. And secondly, you have Bharat Forge, which benefits from both, auto ancillary as well as defense, and many other themes, will be playing out there. And from the mid and small cap segment, Sterling Tools is a fastener company, India's largest fastener maker, and that tends to benefit the maximum from this activity. So I think these three names which we are pushing hard with our clients for investment purpose.
Trade setup, and what is the big picture? Well, first the mood indicator, which is the ET now, greed and fear index, the market mood index. We are in the fear zone. So Nifty may be moving in a very well defined range. The market breadth in last 2 days, it's looking stable. We are way above 8,000 now, but no, today the index has moved higher. So based on all the algorithm, the way the back-ended moves work, today the index has moved really higher. So we are officially now moving towards the greed zone. And Siddharth Damre, I want you to come in here. Historically, markets have peaked out when we've moved in the greed zone. We may not be in extreme greed, we may not be on the upper end of the greed, but from fear to greed, the market mood is or the pendulum of market mood is really oscillating.
So if you observe, Nikunj, there is a sudden spike in this index from, if I'm not wrong, 44, 45 levels to 57 levels. And this is the first time probably we are discussing greed and fear index after expiry. This kind of spikes we need to filter, because what would have happened that all of a sudden the option open interest has drastically reduced because of the expiry. And such reduction in open interest in options, whichever call strike or put strike, fear index might be giving weightage to, has lead to such spike in greed and fear index. So I would skip passing my statement at this point of time, because index is relatively new, and these expiry related spikes, just like open interest, if you see, there's 25% reduction in open interest in Nifty futures, but that is because of expiry. Similarly, this spike in greed and fear index is also related to expiry. So I won't say that people are moving towards the greed zone.
Well, that's a great point, and I think Siddharth, what he's trying to highlight, just to make it simple, that today is the day one of expiry. One of the components of this greed and fear index is also based on the way how the F&O positioning and the options positioning is changing. So because of rollover, the positioning may be slightly altered. So Siddharth, I think, is making a valid point that just ignore that unusual spike what we've seen in last 24 hours. But in terms of positioning, I think the positioning is evident that we are migrating, let's say, from fear zone to the greed zone, and I think that also ties in with the basic market mood. Dharmesh, before we allow you to escape, give me a list of your top ideas for 2017, 1, 2, 3. Large cap ideas where you think a 10 to 15% upside in next year, which is 2017, cannot be ruled out.
See, large cap top three ideas would be SBI Bank, Larsen & Toubro, and Hero MotoCorp. So these are the three plays I think will at least 15% kind of a return for 2017 is there From the mid cap and small cap basket, Sterling Tools I already spoke about. Apart from that, APL Apollo Tubes and Canfin Homes, housing finance company. So these are the three ideas which I think will perform phenomenally well in 2017.
It's an interesting list. Hero Motor Corp. Kunal, what to your mind could be the near-term trajectory though for Hero Motor, because two-wheelers in particular haven't had the best ride, more so since demonetization.
Yeah, I think you can probably it gets reflected absolutely clearly in terms of the charts from a medium-term perspective as well. For Hero Motor Corp, the last 5-6 trading sessions it's been more or less sideways. Opportunities when the indices rise significantly from maybe 200 odd points, and the stock remains sideways and does not show any signs of strength, I think generally causes a bit of a concern, because when the indices try and stabilize or go into a consolidation and these stocks rises, I think the trend would not be very strong from a short-term perspective. So I would not be extremely optimistic. I would probably wait for the stock to breach certain levels on the upside. I think if it manages to sustain a decent rally in sync with what the indices does, then I believe that probably the stock can see some more substantial uptrend from a positional play.
Okay, 3.5 minutes to go, and I think it's time to recap the trading ideas, Anisha.
Yeah, so let me just start off with what exactly Kunal is recommending today. He's got a buy in CET, which is a high risk strategy. 12.25 is his target price in this one. He's also recommending a buy on LIC Housing Finance, a moderate risk idea with a target of 575. A buy on Ashok Leyland, that as well as a moderate risk idea with a target of 85. Manas Jaiswal is recommending a buy on Aditya Birla Nuvo, a buy on Voltas, as well as a sell on Union Bank today. Siddharth Bhamre recommends shorting Hero Motor Corp with a target of 28.55 and a buy on ONGC with a target of 203.
Okay, so 3 minutes to go. Let's try and nail it down to that one top idea from each of our experts. We'll probably take in a fundamental call as well. Okay, Dharmesh, let me first take that from you. Quick answer, we will take the rationale later, but if somebody had to buy one key stock for 2017, large cap or mid cap, which is it? That is your favorite, your top call.
From the large cap space, I will again reiterate SBI should be the best bet for 2017. It tends to benefit from everything, be it infra, metal, or the various retail consumption growth play. And from the mid cap basket, again I will reiterate from the auto ancillary space, Sterling Tools. So you should be buying that.
Okay, so SBI, Dharmesh Kant's top investment areas, SBI as well as Sterling Tools for 2017. Let's nail it down to that one top idea for the day today though. Manas Jaiswal, your top call?
Aditya Birla Nuvo, because after a very long time we have seen great volumes, great breakout on the chart. So, and it is trading above 200 day moving average. So definitely that would be my best call on for this day, and target is 1285, stop loss is 1220.
Kunal Bothra, your top call?
Neeraj, I would bet on Ashok Leyland with a positional target of 85, stop loss at 75.
Ashok Leyland from Kunal's end, a target of 85. Siddharth Bhamre, your top call?
I would short Hero Motor Corp today on rise, maybe 15-20 rupees further up from here, and target 2855, stop loss 3065.
Alright, ladies and gentlemen, last trading day of the year, and 2016 has been a year of upsets, largely political in nature. It's a year where the consensus trade has got it completely wrong. The reset button has been pressed. The consensus view was that emerging markets will do better than developed markets will underperform, interest rates will remain low globally, and Indian markets will break out of the pack. Well, what has happened? Well, commodities have made a comeback, India is underperforming, and Dow is sitting at a lifetime high. So that's the beauty of the market. Sometimes consensus gets it absolutely wrong, and in 2016 the consensus or the popular opinion has got dismissed completely. But as we roll over from 2016 to 2017 in terms of market positioning, I think the general view is that 2017 will be a year of volatility. A lot of unknown events would be at play, and that will add to that extra dimension of nervousness. The dollar index is at a record high. There are massive outflows into emerging markets, out of emerging markets, and there is this big trade where money is moving out of bonds and it is migrating back into developed market equities. So that's the positioning. The pendulum of market mood has taken a 180-degree turn, and that's the kind of template I think we are working with. First, rates, even though it's the last trading day of the year, on your screen 81.19, 81.20 almost for the Nifty, and for the Sensex the first rates are again very flat. In terms of the volume activity, I'm not going to go into small and mid cap indices because they're subject to change, but I'll simply pick up stocks which are in news and where price action is expected to be strong. IFCI, there's something wrong clearly with that ticker, so I think we'll have to come out of the market opening ticker, and now we can identify some stocks which are in news. Natco Pharma, Darshan just told us that the US FDA inspection date is coming out. 593 rupees, ET no impact. Tata Power 76.5. IFCI another 0.5% up there. IDFC Limited continues to remain under pressure. Delta Corp, what a comeback it's been for Delta Corp. It's up more than 14-15% in this week itself. GSFC, a performing stock for 2016, and then you've got Idea Cellular, which is at 73.5. So in terms of market action, a lot of mid-cap stocks, a lot of two-digit stocks are simply picking it up from where they left yesterday. And the other one which I want to point out, not a two-digit stock but a three-digit stock, is Bharat Financials. It's made a comeback, and I think it's in a recovery mode, up more than 10-12% from the recent low.
Yeah, indeed, has been quite a buzzer of late as well. Let's revisit IFCI and whether those staggering rates in IFCI continue today too after a 12% notch up. The first rates in IFCI haven't trickled in, or they have actually. It's a quiet start for IFCI. It's just deciding which way really it wants to head. Couple of other stocks in focus. Jagran Prakashan, they're going to consider a buyback of shares in Jan 5th in the next board meet. That is one stock which is on a tizzy right now. 5.25% is where Jagran is in trade. Petronet LNG, which has signed a deal to build an LNG terminal in Bangladesh. That as well is a stock in focus, and a mover 1.6% higher for Petronet LNG. BHL, which has commissioned another 600 megawatt thermal unit in Telangana. That as well is another stock which is in focus. And then of course you've got an Axis Bank as well, when Kotak has upgraded the stock to an add from the earlier reduce. So look out for this. And Engineers India, which goes ex-bonus today, may see that price adjustment take place. But for the markets, it's been a quiet start, much on expected lines. But good to see that we're building on to that 8100 mark. Slowly but surely, we are, beginning to pick up in trade.
Yes, indeed. In fact, 0.67%, so a third of a percent in the green for the small cap space, which is good. Okay, Engineers India would reckon there's some dividend adjustment here or something else. Otherwise, I see no reason for a sharp fall. But
bonus was there, that's what I remember.
Okay, 7%. But anyway, yes, a bit of a downtick there. What else? Sri Renuka Sugars has this 4% uptick. I think Bajaj Hindustan is also piling in some gains. So some names in the sugar space are doing well. Bharat Financial continues to rise and shine. So at 470, nobody wanted to buy it at 609 and 130 rupees higher. A lot of people are going out and buying into some of these microfinance companies as well. Page has just bit of a pullback after the big move. Divi's continues. So yesterday down 3.5, today down under 1.5. So those 2-day rally was short-lived for Divi's Lab, unfortunately, and this one back in the red again. And just a couple of small caps, if you will. Just wanting to see if there's something else. McDowell Holdings has some gains to itself. I think sugar as a pack is across the board higher. So Rana Sugar, Sakti Sugar, Thiru Aruran, almost Uttam Sugar, almost everything that has got Chini or sugar attached to it seems to be doing really well for itself.
Yeah, it is. Some other names which are propping up in trade, and Petronet LNG, like I just told you, that's looking good. Kaveri Seeds as well, which is holding out 1.4% as we speak. Havells has made a smart move, 1.5% higher. And a couple of these auto names as well are propping up ahead of their monthly sales data for December, which is going to come out on Monday. So those are names which are holding out. Eicher is up 1.7%, and Torrent Pharma, that's the one which is the biggest mover right now, with a 2.25% move on Torrent futures. On the flip side, because of Well, names like an engine as India going ex-bonus, so that's why you're seeing that staggering move. Don't be fooled by that. It's not like someone's hammering the stock down, it's just an ex-bonus price adjustment taking place on this one. Not just that, but besides it, IDFC, a mover from yesterday, down today, Divi's, Page, BPCL, these are a couple of losers as we speak. But Siddharth, what's your first take on how trade is kick-started?
Well, it's a positive start, and as we were mentioning in beginning of the show, that now the resistance has shifted towards 82, 82.50, which is a reference from the daily charts on Nifty, and support remains at 8,000. So maybe initially we are trying to move towards the upper side of the range, which is like 82, 82.50. So those people who are probably holding longs created at lower levels might continue to hold on. But creating fresh positional longs from a time horizon of 1 week, 2 week perspective, I don't think so it's desirable. We need to check that how data is shaping up. At this point of time, I will identify more stocks. At this point of time, like L&T is doing well. We have some of the names like ONGC, Hindustan Unilever, ICICI Bank, private sector banks. Neeraj was mentioning in beginning of show that they have seen decent buying. So maybe for 1 or 2 days more, private sector banks can do well. So that's how my trade advice would be, rather than thinking of going aggressively long in Nifty.
Kunal, what is your sense? Anything which is popping up on your screen?
Yeah, Nikunj, I think one of the names which you mentioned, GSFC, I think that is what I had recommended even yesterday in the late afternoon show. The stock is looking extremely good now. The last 1 week has been extremely fruitful for the stock in terms of the short-term trend. It had that one big day of double-digit gains. Post that had a series of consolidation, consolidated on this 93-94 odd zone. But the volumes were extremely strong even in that period of consolidation. Yesterday also in the second half of the session, the stock managed to stage a fresh swing high, and which probably goes to show that the interest in the stock, which was probably generated last week, maintained. And I believe that from a short-term trading perspective, I think these are very strong signs. So GSFC is the one which remains a buy from me. The earlier target was 104. I would maintain that target of 104 on GSFC, but trailing my stop loss now to 95.
And Manas, what is your observation?
See two stocks. First is Balrampur Chini, where stock has given a clear breakout above 125. So here definitely you can take a long call. I think stock can give a sharp up move now. It can test 132 soon. So here you can take a long call with a stop loss of 122. And second is L&T Finance Holding, where the stock has broken the resistance of 85. I think 2-3 days back stock made a base near to 80 rupees. Now it is trading above 200 moving average. So here you can see some recovery. Stock can test 89. So you can buy it with a stop loss of 84 rupee 50 paisa.
Dharmesh, your last piece of advice for viewers who are watching us right now as to how should they position themselves for 2017? Is it going to be a racy or a turbulent year ahead?
See, one thing is very clear, you have to buy this market, and it's a very simple, to cut it very short. I think one has to buy in a staggered manner from here till March, like if the fresh money 30% out, 30% post budget, and the balance by 31st of March, because eventually all the good benefits which are there will play out for the market. We just don't know from where the index will eventually begin the bull run. So the best idea is to go keep on buying the market, quality stocks, buy right, and after March you have to sit tight and wait for the results, because even if the market comes down, you are getting it at a better price, and if the market goes up, say by March if you are standing at 9,000, so there is nothing which will stop this market, I mean Nifty, from going from 9 to 12,000. If it falls down to say 7,000, sub 7,000 below, then again it has to pick up, because fundamentals have to play out. So I think the net impact of demonetization and remonetization will be very beneficial for the economy. Things are right. The dealer checks which we are doing are suggesting positive indications in the times to come. So one has to buy, and the sectors which I would recommend to go long on is the cyclicals, the banking space, infra space, and automobile space. These are three sectors which should do fairly well in 2017.
Okay, Dharmesh, let you go on that note, and here's wishing you a very happy new
Thank
year
you.
from all of us.
Happy New Year to you all and all your viewers. Thank you.
Okay, that's the view coming in from Dharmesh Kant. Let's revisit where the market has settled in at, and well, not bad. It looked like a quiet start, but we're beginning to pick up to that 8150 mark actually. 8143 is